Hi, everyone, and welcome to Buffett and Beyond Research Stock of the Week. And we're looking at Nike because they just came out with earnings. And the question is Nike still flying high? And yeah, is there more air under Nike? Let's take a look. And remember, folks, if you want to live on this beach like Jimmy Buffett once did, you've got to learn how to invest even better than Warren Buffett does now. But we have some stormy clouds here and some rough weather relative to Nike. So let's take a look. Well, Nike designs, we all know what Nike does. They design, develop, and market footwear, apparel, equipment, and accessories. They sell products to retail accounts through Nike-owned stores. So Nike owns the stores and the internet, and through a mix of independent distributors, licenses in numerous countries, and the U.S. accounts for 70% of the revenue. Now, offerings are focused in 6 categories, and we all know them: running, basketball, the Jordan brand, football, which is soccer, training and sportswear. And there's another product line for kids, have about 79,000 employees. So it's a pretty big company, folks. And when we look at the Nike numbers next to the average stock are the blue vertical lines and Nike are the green lines. We look at the clean surplus ROE and we think about how much money the company is making, or what percentage the company is making on the money that has been invested by the equity shareholders. So just think of your bank account. Would you rather invest in a stock that is returning you, or bank that is returning you 13.5% or 14.7% like Nike is doing? But let's look further. The average stock has a net income of about 13% right here. Nike only has income now increase, now this is increased per year over the past 5 years, of 3.8%. Folks, that is not very good. And when we look at revenue, and folks, a company has to make a revenue or bring in revenue in order to make a profit. So here's the revenue. The average stock 7.1%, Nike 6.4%, below average. So we have some things we don't like here about Nike. And let's look at a little closer at the numbers. And folks, we see that Nike is supposed to make about $4 for 2025, making $3.60 this year. But when we look all the way down here, we see that it made about $3.60, actually $3.56 in 2021. So we can see that this company has not increased its earnings very much at all. In fact, over 5 years, over here, averaging about 3.8%, which is really nothing. Now, the clean surplus ROE is above the average stock ROE, but you could see that it's dropping. That means it is making money, and the earnings are increasing each year, but that rate of increase is dropping. So in other words, decelerating. And if you're in a race car, do you want a race car that's accelerating or at least going at constant speed, or one that is decelerating and going slower and slower? Now, the thing that we don't like is the retention rate. In other words, how much of the money the company is making does it put back into itself in order to grow? And it's about 60%. So 59% for 2025, averaging about 63%. This means the company is not growing very much. And when you see retention rate around this much, you want to see a high dividend, because that means it's putting half of the money, approximately half of the money, back into itself in order to grow. The other half it's paying out in a dividend. So what's the reason to buy a stock like Nike? Well, when we look at the dividend of about 1.6%, we don't like that at all. That's not very high at all. So the retention rate means of only around 60% means the company is not growing very much. So we have a lot of things we don't like about this stock. When we look at revenue growth for 2025, barely growing at all. Now, we understand that retail is having a hard time. There are a lot of companies out there which have been with us for a long time that we've taken out of our portfolio, and we're looking at stocks like Dollar General, and those are the stocks that usually people go to when we get into a recession or when they have a little money, just a little money to spend. And we're seeing that the retail person out there is not even going to the stores that are underpriced or priced lower than your average store in the mall. Well, there is no average store in the mall anymore because malls barely exist. So everything is online. And folks, we're looking at Nike here and we don't like what we see. So is Nike flying high? We don't think so. And these numbers are showing decreasing return on equity. So in other words, you're in a bank account that is paying you less and less interest each year on average. Let us look at what Nike has done over the past 1 year. The S&P 500, which is the index to beat, is this black line, and we can see Nike is falling way below that. So with the S&P, the average stock, up about 25%, this stock, Nike, is down about 18%. That's a big difference in here, folks. I mean, you might as well put your money in the S&P 500 than in Nike right now. And when we look at the past 5 years, well, Nike was actually doing good for a couple of years here. Back here, it was average. Then it got into the growth period, and people were looking at it that maybe it was going to make some money. And then 2022, which was a bad year for the overall market, Nike just came pretty, I don't want to say crashing down, but yeah, down almost twice as much as the average stock. Again, the average stock is the black line, the S&P 500. And then it tried to rally. I'm talking about Nike in this yellow colored line, and that just kind of fell down because it just was not bringing in the money. So over 5 years, the average stock in the S&P 500 up 90%, while Nike was up just 15%. Big difference there, folks. We don't care for Nike. It's not flying high relative to us investing in it. Maybe you can wear the shoes, or maybe you can jump a little higher and a little further and run a little faster, but with your money, I don't think that's the place to put it. So folks, we had an average week in the market this week, and Nike came out and didn't do too much for the market at all, and didn't do too much for the company at all. So therefore, we're looking at a weekend ahead of us. Forget about the market. Go out, be with your family, be with your loved ones, walk on the beach, forget about the market, because our newsletter that comes out daily starts on Tuesday of each week and goes to Tuesday, Wednesday, Thursday, and Friday, and then Saturday we come out with 3 videos. So go out, enjoy this beach, walk on the golf course, go swimming, just take your mind off everything, but most of all, be safe. And folks, we'll see you back here this coming week.